I never really try to predict a quarter or two ahead because there's any number of idiosyncratic events. I do think as we look out to 2025, I'm pretty bullish. If we do get kind of that transition from balance sheet shrinking to balance sheet growing, even if it's not at a rapid pace, as those things occur, later this year and then probably for the balance sheet next year, that should probably help global liquidity. And one thing I point out a number of times is that the best correlate that I've seen for Bitcoin price is global liquidity. Probably global liquidity go higher in 2025. And given all the other characteristics we see about Bitcoin at the time, I'm pretty bullish.
LYN ALDEN, a well-known macro analyst, investment strategist, and advocate for sound money, is a strong proponent of Bitcoin. Recently, she has become even more optimistic about the leading cryptocurrency, anticipating a highly bullish year for Bitcoin in 2025 due to several aligning factors. Like many other prominent investors and analysts, Alden expects an active year ahead for Bitcoin, the US economy, and the global economy. The main driver behind Alden's bullish outlook is global liquidity. Similar to Real Vision founder and CEO RAOUL, Alden foresees a massive surge in global liquidity in 2025, beginning with anticipated rate cuts by the US Federal Reserve and other major central banks later this year. She predicts that this liquidity boost, along with other bullish factors, such as spot Bitcoin ETFs attracting billions from traditional investors, will lead to significantly higher Bitcoin prices in 2025. In a recent interview with Natalie Brunell, Alden discussed the recent turmoil in global stock markets, the panicked reactions, and the quick recovery that followed. She believes the concerns over the Japanese carry trade were overblown, leading to the swift market recovery. With that issue now behind us, Alden is predicting a strong bullish trend for Bitcoin in the coming months, especially once central banks begin cutting rates and the expected liquidity surge kicks in. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Two different time frames there. I never really try to predict a quarter or two ahead because there's any number of idiosyncratic events. I do think as we look out to 2025, I'm pretty bullish. I don't really have a strong opinion for the remainder of this year. We were kind of trading in that 60 to 70,000 range for a while. Lately, we've been dipping into the upper 50s, which is not great. But I think that, especially once we turn to a more pro-liquidity environment, if we see the Fed eventually layering in some gradual rate cuts, if we do get kind of that transition from balance sheet shrinking to balance sheet growing, even if it's not at a rapid pace, as those things occur, later this year and then probably for the balance sheet next year, that should probably help global liquidity. One thing I point out a number of times is that the best correlate that I've seen for Bitcoin price is global liquidity. It's not the only correlate, but it's among things I track that's both logically and then in practice one of the better correlates. And since I expect probably global liquidity to go higher in 2025, and given all the other characteristics we see about Bitcoin at the time, I'm pretty bullish. As far as those really long-term forecasts, one thing to keep in mind is that they were not like inflation adjusted. Michael Saylor, for example, he gave that talk about I think the 21-year price forecast, which is a nice touch. And like if I recall correctly, his base case was something like Bitcoin becomes 7% of global assets, up from effectively like a tenth of a percent or whatever it is now. And so while that is obviously a huge run up, that's basically a 70x appreciation in terms of percentage of total assets. It's not as though Bitcoin has taken over the world in that scenario. So basically in 21 years, can it go from 0.1% to 7%? I don't really view that as like an outrageous possibility. And that was his base case. And the way that you kind of can arrive at that is something, now depending on what source you reference, total global assets are, somewhere close to $1 quadrillion, which is a really funny number, 1,000 trillions. I think it's something like 900 trillion. Right. That's kind of the baseline. And over time, when you go through growth and inflation for another 21 years, that number is going to be a lot higher. That's going to be a number of quadrillions, like thousands of trillions. And then as Bitcoin goes from, whatever tiny sub 1% it is now up to, some presumably higher number of percentage, that's how you get those multi-million dollar numbers.
Yeah.
Even though in inflation adjusted terms, I mean, it's obviously a lot of appreciation, but it depends how bullish you are. I'm not particularly surprised with where we are now, though, because going back to my prior point about correlating with global
Hmm.
liquidity has been flat for like 2 years. So the fact that Bitcoin's chopping around, at least on that historic metric, does make a lot of sense. When we entered this year, I expected to be higher, but not necessarily new highs. So we got those, at
Hmm.
least, we nominally touched new highs, even though we're not at them currently. And my bullishness really extends into 2025, and is kind of reliant on that that rough timeline of Fed easing and then going
Got
back to structural. If basically if I thought that the deficits were going to shrink, or if I thought that the Fed was going to be able to stay tighter for longer, then it might have to push back my bullish Bitcoin forecast,
got
because
it.
we're basically comparing exchange rates between two types of money, so the fundamentals of both monies matter.
Hmm.
But based on the timeline I see, I'm fairly constructive for next year.
LYN ALDEN's analysis of an impending spike in global liquidity aligns closely with RAOUL's everything code thesis, which posits that central banks are compelled to periodically print money to sustain their economies and prevent a widespread sovereign debt collapse, similar to the crisis narrowly avoided during the Great Financial Crisis. Powell argues that by closely monitoring central bank activities, we can accurately predict bull and bear markets. In her interview with Natalie Brunell, Alden explains that central banks have been draining liquidity over the past 2 years, and markets are nearing their breaking point. She believes that this indicates the era of quantitative tightening is nearly over, and that some much-needed easing is on the horizon to prevent things from overheating. While Alden predicts that this shift will be highly beneficial for Bitcoin and other cryptocurrencies, she notes that it may not have as significant an impact on other asset classes. Here are more clips from the interview.
Yeah, so my expectation, unless something dramatic happens, which is, markets are levered and fragile enough that that's always possible, but assuming nothing dramatic happens, I would expect a kind of a mild rate cutting cycle. So fairly modest rate cuts, maybe next meeting, maybe the meeting after that. We'll see what happens with incoming economic data and CPI prints. And other than psychological, I don't think it's that big of a deal if we get those mild cuts. And the reason for that is kind of similar to why rate hikes had kind of weaker effects than many people expected on their way up, which is to say that a lot of people locked in really low fixed rate debt.
Mhm.
And so if mortgage rates or short-term lending rates or business rates, whatever the case may be, if that goes down a little bit, it doesn't really change too much. The people still have their locked-in debt. They're not going to refinance that for the most part. You're not going to get a big mortgage refinancing boom from anything less than probably like 100 basis points of cutting. And so I just don't think it's that big of an impact. And I think in general, people keep overestimating the importance of the Fed and underestimating the importance of fiscal, basically deficits versus surplus, in this case, very large deficits. I continue to view that as a much bigger factor than around the margins things that the Fed does. Now, of course, if they were to come out tomorrow and cut rates to zero, that'd be a huge impact. But if they just start a gradual rate cutting cycle, I think it's somewhat overblown what the impact would be.
When they cut, I feel like that's when the market tended to crash. So does that typically happen?
Yeah, but it's not causal. It's not like cutting it makes it crash. It's that usually something bad is happening, generally a softening economy or some sort of like, liquidity crisis or something. And so they cut rates in response to that, but then also asset prices are not doing very well because they have lower expected earnings because of a potential recession or a softer economy. And so normally rate cuts are not very good for market prices. This one could be different in the sense that they're coming down from higher than normal levels, at least in modern times with the amount of debt we have. And so going from high to kind of normal is different
Mhm.
than going from, say, normal to low because of a economic softness. Basically, if the economy just kind of is average here, then their mandate of balancing employment and inflation can point toward mild cuts without necessarily implying there's a recession. Or a severe recession. It doesn't mean I'm super bullish on the S&P 500 because it's already, the valuations are rather high.
Mhm.
So even if earnings don't have a meaningful dip, and even if we don't have any sort of significant recession, I just think that the forward return prospects are somewhat lackluster.
The cryptocurrency community has recently turned its attention to tokens with high fully diluted valuations and low circulating supply, raising concerns about their sustainability. These tokens often launch with minimal circulating supply, leading to rapid price increases due to limited trading liquidity. However, this surge is typically followed by significant token unlocks from early investors, creating a situation where much of the potential upside is captured early, leaving retail investors with fewer opportunities for gains. Data from Binance researchers indicates that between 2024 and 2030, approximately $155 billion worth of such tokens are set to be unlocked, which could lead to significant selling pressure and impact market stability if demand doesn't rise correspondingly. Despite these concerns, RAOUL sees potential in these low-float tokens during a bull market. He suggests that the market's general dislike for low-float, high FDV tokens often causes them to drop sharply after the initial float, as future unlocks are priced in. However, many of these unlocks do not result in large selling events. Once supply is fully understood, demand becomes the key driver. If a token shows real demand growth, whether through network activity or speculative interest, demand could outpace supply, leading to significant price increases. Powell believes that as we enter a crypto summer or altcoin season, low-float tokens with small supplies and rising demand could see substantial upside. Powell cautions that his analysis isn't a guarantee, but he believes tokens that demonstrate network growth and attract investor interest may outperform over the next 18 months. While he hasn't yet pinpointed which tokens are most promising, he notes that low-float tokens are underowned, and any increase in demand could move them significantly. However, he advises caution and warns against overstaying in these positions. Do you agree with Powell's analysis that low-float, high FDV tokens like Sway, Aptos, Arbitrum, Flow, Gala, and Ethereum might outperform in the coming months? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.